Student, how are you? I hope you all are fine. And I want to welcome to all of the students of grade 10 and 11. Okay, today's video we discuss about the trading account. It is the first step of final account. Previous video we discussed about the final account. What is final account? What are different objectives and importance of final account? But today we discuss its types. Okay, and the first type is trading account. So let's start our video today. Okay, today we are going to discuss about the trading account. So while talking about trading account, you should remember that it is related with the goods. Okay, trading activities. Okay, those expenses which are incurred in the factories while producing goods, these are included here in this trading account. Okay, so trading account is the first step of final account. It is a concept in which the different expenses, or we can say the direct expenses, are recorded in debit side and direct income, that is sales, is recorded in credit side. Okay, so it is an account which is prepared to determine gross profit or gross loss of an organization. It is prepared for the different reasons, and the reasons are given in your slide as well. The first reason, to provide information about gross profit or gross loss. Okay, so to determine gross profit or gross loss, it is necessary to prepare trading account. Okay, in gross profit or loss, there is no adjustment of indirect income and expenses. Okay, and to know about the percentage of gross profit to sales, okay, trading account should be prepared. That means to compare the gross profit with previous year gross profit, it should be prepared. Similarly, the ratio of profit to sales, it should be prepared. Okay, next, to compare gross profit ratio of a year with the ratio of previous year to see whether the performance is improving or not. If the gross profit is higher than previous year, obviously there is an improvement. Okay, here is a specimen of trading account of Joinster company, and while preparing trading account, we should write the heading first, that is the name of the company. So here is no name, that's why we can write ... company limited trading accounts for the year ending. Why we write for the year ending? It is the continuous process. Okay, and this account has two sides, debit side and credit side. Okay, and altogether there are 4 columns. Okay, first column particulars, second column amount, third column particulars again, and fourth column amount again. So let's remember like PAPA, Papa. Okay, if you remember Papa, then you can easily remember this format, Papa. But P of particulars, A amount, P again particulars, A again amount, Papa. Okay, so in debit side we record different expenses which are related in the factory. That means direct expenses are recorded in debit side, and in credit side the indirect expense, income is recorded. Okay, in credit side, like sales, including closing stock. Okay, so this is the format of trading account. Okay, so after this we discuss about its debit items and credit items. Okay, we already discussed about the debit items and credit items in previous slide. Now here there is a debit items and credit item of trading account. Okay, so first let's discuss the debit items. Okay, in debit side of trading account we write the opening stock first. Okay, opening stock means the stock remaining at the beginning of this year. Okay, that is opening stock, and it is also called the unsold stock, unsold goods, that is opening stock. Okay, it is written debit side, and it is written at first. And next, purchase. If there is a purchase return, and it should be deducted from the purchase amount. Purchase return is also called return to suppliers. Okay. Similarly, manufacturing expenses like wages, factory expenses, royalties, etc. are recorded in debit side of trading account. Similarly, buying expenses like wages and salaries, carriage inward, carriage on purchase, freight, duty and clearing charges, dock charges, custom duty, that is also called import duty. So these are recorded in debit side as well. Similarly, excise duty, okay, and store consumed are also recorded in debit side. Okay, and now let's move to credit side. Okay, in credit side there are very few items are recorded, and it is very easy to remember as well. Okay, in credit side it is all the incomes, direct incomes are recorded, and there is sales at first. So sales is to be written at first, and if there is a sales return, it should be deducted from the sales amount. Okay, and sales return is also called the return from customers. Okay, return from customers, that is sales return, and it is deducted from the sales amount. Okay, yes. Okay, after this, closing stock is also written in credit side if it's given and outside the trial balance. Okay, trial balance को बाहिर हाम्रो given मा दिएको छ भने we can write in this side. Okay, and value of closing stock is found out if there is if no given, then by using the formula we can find out the closing stock, and the formula is like that. Closing stock equals to opening stock plus purchase minus sales. Okay. That's how we can find out the closing stock. So these are the items which are included in debit side and credit side of trading account. Okay, so these are the items. Now let's move to the whole format of trading account. Okay, so here is the specimen of trading account. Okay, where the heading is written at first, and the heading is like that: the debit company. If there is a name of company, then we should write the name of the company. Okay, and if you are working in some particular organization, then you should write the name of your company. Okay, and the trading account, and for the year ending, that means it is a continuous process of preparing the trading account. And two sides, obviously debit side and credit side. There are 4 columns, that is particulars amount, papa. Yes, easy to remember. Okay, easy to remember. And now at the debit side, there are the different items which are written here. Okay, so first item, opening stock, we should write 2 in debit side and buy in credit side. Okay, it is the rule. So we should write 2 in debit side, buy in credit side before writing the different items. Okay, in debit side, first item we have opening stock. Okay, and the amount is written inside the amount column. After that, purchase. If there is a purchase return, then it should be deducted. Okay, and then finally it can be written in amount column. Okay, then purchase expenses, that means expenses relating to purchase are also recorded in debit side. Okay, and the different expenses like carries expenses, which is also called carries inward or carries on purchase, is also recorded here. Freight inward or freight on purchase पनि भाडै हो, शिपको भाडाहरू पर्छ यसमा, while importing the goods अथवा while purchasing the goods. Okay, and wages and salaries also recorded here, but salaries and wages are not recorded, remember. Okay, wages and salaries are recorded here, but salaries and wages are not recorded here. Okay, and then fuel, motive power, lighting expenses are also recorded in debit side of trading account. Coal, coke, gas, it is useful to operate the machines or whole factory as well. Similarly, clearing charges, stock clearing charges, coal, coke, cash clearing charges, octroi, local municipal charges are यसमै record हुन्छ. Consumable store, all other factory or manufacturing or production related expenses are recorded in debit side of trading account. Again, and let's move to credit side. The first item we have sales. Okay, and the amount should be written in the particulars column, because if there is a sales return amount, then it should be deducted from sales. Okay, and after that, after deducting from sales, it can be written in the amount column. Okay, and after sales, closing stock should be written in the amount column. Okay, closing stock means the stock which are remain unsold in previous year, and that is closing stock. Okay, and we should compare the debit side with credit side after recording all these items. Okay, if there is more in credit side, then there is gross profit and it is written in debit side. But if there is the more amount of expenses or debit side, then there is the gross loss and it is written in the credit side. Okay, so and after this, debit side should be equal with credit side. Okay, after adjusting the gross profit or gross loss. Okay, this is the complete format of trading account. Okay. Okay, here are some notes and exercise. Okay, and the notes is like that. The difference between the debit total and credit total of a trading account represent gross profit or gross loss. Okay, if the credit total is higher than debit total, then it will result gross profit. Okay, that means debit total is lesser than credit total, it results profit, because there is more income than expenses. Okay, similarly it will similarly opposite of this, that means if the credit total is lesser than debit total, there is the gross loss. Okay, and gross profit or gross loss can be determined by preparing trading account. In exam, the question maybe it's like how do you determine gross profit or gross loss? Then we should write gross profit or gross loss can be determined by preparing trading account. Okay, and how you prepare trading account? And okay, there are different process, steps, and different items I already mentioned you. Okay, and so this is the end of the theory part of the trading account, and here is the exercise. Memorize different items included in the debit side and credit side of trading account. It is very important, okay, before starting the numerical part. of trading account. So remember all the items included in debit side and credit side of trading account. And this much for this video, and keep watching for further updates.